All right, ladies and gentlemen, welcome back. This is another video, okay? And in this video, guys, I'm going to share very important topics that you will need in your trading career, okay? So you need to pay very close attention to this video, okay? All right, so some of the things I'm going to share, like I said, will help you become a profitable trader, or will help you significantly in your trading journey to becoming profitable. All right, so you need to pay very close attention to everything I'm going to talk about in this video. All right, so as you can see on our screen, we have the trading mindset, okay? And the reason why I'm starting with this is because the mindset, the mind, it all starts in the mind, guys. So if you don't have the right mindset, guys, you will fail. All right, so you need to prepare your mindset, or you need to have the correct mindset when it comes to trading. All right, so let's talk about how you need to prepare your mind before approaching trading. All right, or before approaching forex trading. Right, so some of the things you need to know are: number one, trading is very risky and you can lose a lot of money if you do not know what you're doing. All right, you need to understand that it is very risky, okay? And if you don't know what you're doing, you'll lose a lot of money. All right, then another thing you need to know is you need to treat trading as a business, okay? You need to treat trading as a business, okay? Just like any other business, okay? There are losses and profits, okay? And also challenges, okay? So it's the same thing with trading, all right? You will face losses, okay? Or you will make losses and profits, and also face other different challenges, okay? So it needs to be in your mind, or this needs to also stick in your mind, all right? Then another thing, and this is also very important, okay? You need to know that trading is a marathon, not a sprint, guys, okay? Don't expect to, just join, trading forex today, and the next day, you're a billionaire, or next day you're buying your dream house or your dream car, okay? That's not how it happens, okay? It takes time, all right? It takes time. The time it takes might be different when it comes to different traders, but the whole point is it takes time. You will not get rich overnight, all right? So you need to prepare your mind with that as well, all right? All right, so let's talk about now some of the things you need to avoid when trading, okay? So you need to avoid emotional trading. And as you can see, emotional trading, okay, avoid making decisions based on emotions such as fear, okay, greed, or hope. All right, stick to your trading plan and strategy. All right, so you need to avoid emotional trading. All right, the next, you need to avoid over trading. All right, and as you can see right there, avoid trading too frequently or with too much capital, okay? It can lead to significant losses and can be emotionally and financially draining. So you need to avoid over trading, guys, okay? The next, lack of risk management, okay? And what it says right there, it says avoid trading without a risk management plan, okay? Always use stop loss orders and limit orders to manage your risk. So you need to avoid trading without a risk management plan, guys, okay? The next, we have not using a demo account, okay? Avoid trading with real money until you have practiced and tested your strategy on a demo account. Okay, because we have traders that skip this. This is important, guys. You need to first practice on your demo account before you dive in or go to a live account. Okay, all right. So still on how the things you need to avoid when trading. Okay, we have following others blindly. All right, so avoid blindly following other traders or signal providers without understanding their strategy and risk management. Okay, this happens. Okay, so many traders are in so many different groups of different traders, but they don't understand their strategy and risk management. So you need to avoid following others blindly. All right. The next is trading without proper analysis, guys. Okay, avoid trading without proper analysis of the market and the currency pairs you are trading. Okay, so before you trade, you need to have analyzed every trade first. Okay, don't jump in blindly, don't just be pressing buttons, guys. Okay, all right, like I said, avoid trading without proper analysis. Right, analyze first, then trade. All right. All right, so next is trading without a plan. Okay, avoid trading without a clear plan. Okay, including entry and exit points, risk management, and profit targets. Okay, so you need to avoid trading without a clear plan, guys. Have a plan, have a written plan down, or a set of rules that you follow, guys, before you trade. All right. All right, now, so let's talk about trading psychology. Okay, now, guys, you need to pay real attention. Okay, you need to be attentive. If there's anything important in trading, okay, if there's anything that you could ever understand and you will become profitable, it is trading psychology. This topic right here, or this component of trading, is by far, okay, it is unmatched, uncompared. Okay, I'm telling you guys, I'm not kidding. Okay, trading psychology is by far the most important thing that you need in trading. If you can understand trading psychology, guys, okay, let me tell you guys, you will be profitable. You just have to believe me. All right. All right. So what's trading psychology? Okay, so trading psychology refers to the mental and emotional aspects that influence a trader's decision-making process in the financial markets. As you can see right there, mental and emotional aspects. Okay, and the key word is influence. Okay, so this right here will influence your actions, guys. The next thing that you will do. All right, so this is important, guys. Okay, this is very important. All right. All right, so it encompasses a wide range of emotions such as fear, greed, confidence, and discipline. All right, and I'll talk about these emotions later. All right, which play a crucial role in shaping the outcomes of trading activities. Like I said, this right here, these emotions right here, okay, they play a crucial role in shaping the outcomes. Okay, okay. All right, so understanding and mastering trading psychology is essential for any trader, particularly in the fast-paced and volatile world of Forex. So it's very crucial that you have your trading psychology in check, guys. Okay, if you have this in check, if you can actually have good trading psychology, guys, okay, trust me, guys. All right, this right here will influence significantly. Okay, it influence significantly um how you will become or you being a profitable trader. Okay, so you need to master trading psychology. All right, all right. So now let's talk about trading emotions. Okay, all right. So some of the emotions we have greed. Okay, as you can see, greed, wanting to make a lot of money quickly, can make a trader take big risks. Okay, it is important to be careful and stick to the plan. So, guys, greed, like I said, guys, don't expect, to just come in today and tomorrow, you're having your dream car, you know, you're living in your dream mansion or dream house. No, that's not how it happens, guys. Everything takes time, guys. Everything takes time. Everything good takes time. Okay? So if you want to make money quickly, guys, trust me, with greed, you don't have any space when it comes to trading. You will lose, you will get frustrated, and you will quit. Okay? That's how it is. All right? All right, so next thing is fear. All right? So one of the other emotions is fear. All right? So being scared of losing money or missing out on profits can make you act too fast, okay, or not at all. Okay, so facing fear means having strategies in place to manage risks, guys. Okay, because some traders have fear of missing out. Okay, so let's say you're looking at the charts and they have that fear of missing out, so they just they just react very fast because they want to be in the market. They fear, missing out. Okay, so they don't analyze, they just want to be in the market because they think, okay, the market has set off without me, so I need to be in the market. So that fear of missing out, okay, is um, will cause you to react too first. And then we also have fear of not taking trades because you fear losing money. Okay, you need to understand one thing: you don't need to fear to lose money when it comes to trading. Okay, because losing is part of the game. Okay, losses are inevitable when it comes to trading, guys. Okay, I don't care how much you experience, even the most experienced traders will lose at some point. So you don't need to fear losses, guys, okay? Losses are part of the game, and your role as a trader is not to lose or eliminate losses, okay? It's just to manage them and make sure you just control them, okay? So you don't need to fear to lose, okay? All right, so next let's talk about overconfidence, okay? Feeling too sure of yourself after a few good trades might make you take even bigger risks. Okay, so you need to stay humble and think before making decision. Okay, so overconfidence comes in. Let's say you are on a winning streak. All right, this happens. Okay, you don't need to be confident because trust me, guys, the loss is just behind the corner. The loss is coming, it's just on the way. All right, trust me, when you're overconfident, okay, like I said, losses are part of the game. Okay, you can have a winning streak like 5 days, or even in a day, you can have a winning streak of like 10 trades, but you will lose at some point, guys. Okay, and let's say if that losing streak comes, it might cause you to have fear again, guys. Okay, so you need to know, you need to stay, you don't need to be overconfident, guys. Just stay humble, okay, and think before making decisions, okay, because losses will come at some point, whether you like it or not. All right all right so now let's talk about now impatience. Okay, wanting results right away can make you do things too quickly. Okay, patience is key in forex trading. Okay, patience, guys. You need to be patient and wait for your setups. Okay, patience is key in forex trading. Following your plan, even if things do not happen instantly. Okay, and I know, guys, sometimes you might be impatient because of the life pressure that you have. Okay, you might have pressure, maybe let's say pay your rent, or pay your medical bills or any other bills. Okay, but trust me, guys, in trading you need to be very patient. Okay, only execute at the right time. All right. All right, so now let's talk about still on trading psychology, but this will be the trading psychology rules, okay? And we're going to talk about how you can develop a strong mindset. All right? All right, so how can you develop a strong mindset? So some of the things you need to have is discipline, okay? And as you can see, discipline is the backbone of successful Forex trading, providing a solid foundation for making sound decisions and managing risks effectively. Guys, if you're not disciplined, okay, if you're not disciplined, guys, again, you have no space in the Forex industry, guys. You need to be so disciplined, guys. Okay, this is very, very key. Discipline is key, guys. Okay, discipline means you follow your trading plan no matter what, guys. Okay, no matter what, what information you have, no matter what other thoughts you have in your mind, you need to be disciplined and stick to your plan no matter what, guys. I'm telling you. Okay. All right, so now some of the things that you can do for you to be able to enforce discipline are, and as you can see right there, establishing trading rules. So this is something that you can do for you to establish or emphasize discipline. All right. So establishing trading rules. Okay. So what is it? So creating a set of clear and well-defined trading rules is essential for maintaining discipline. All right, like I said, you need to establish trading rules, and you need to follow them no matter what, guys. No matter what, never deviate from your trading rules. All right, you need to follow them to the script. All right. All right, the next thing that you can do for you to be able to enforce or emphasize discipline is following a trading plan, guys. So you need to have a trading plan, and you need to follow your trading plan no matter what, guys. Okay. And as you can see, regularly review and adjust your trading plan as needed. Okay, incorporating lessons learned from past experience to continually improve its effectiveness. Okay, so you need to review that plan, okay, and then adjust. All right, but the most important thing is you need to follow your trading plan no matter what. Never change your mind when it comes to your trading plan. Never. Okay, that will enforce discipline, guys. Okay, because discipline is key. Like I said, discipline is key. All right. All right. So still on developing a strong mindset, we have setting realistic goals. Okay. So this is something that you could do for you to develop a strong mindset when it comes to trading. So setting realistic goals is a cornerstone of effective risk management in Forex. All right. And how you can achieve that is by having short-term versus long-term goals. Okay, and as you can see, consider both short-term and long-term goals when developing your plan. All right, so you need to have goals. Okay, short-term and long-term. All right. All right, so next thing is SMART criteria. Okay, and SMART stands for specific, measurable, achievable, relevant, time bound. All right. All right. So apply the SMART criteria to your trading goals. Okay. So this is something that you can do to emphasize or achieving setting realistic goals. Okay. All right. Still on developing a strong mindset. So we have position sizing and leverage. Okay. So managing the size of your positions and understanding the impact of leverage are critical aspects of risk management in Forex. All right. So position sizing and leverage is key also. Okay. Good position sizing. All right. And leverage. All right. So how can you achieve that? Okay, you can achieve that by calculating your position size. All right, as you can see, determine your position size based on the size of your account. Okay, this is important. Based on the size of your trading account. Okay, the percentage of capital you're willing to risk. This is also important. Okay, so it's based on this. Okay, that you're willing to risk on a single trade and the distance to your stop loss levels. Okay, so you're calculating your position size based on the size of your account and the percentage of capital you're willing to risk. All right, so that's how you achieve good position sizing and leverage. Right. All right, so next thing is also understanding leverage effects. Okay, so leverage can amplify both gains and losses in forex trading, right? While it offers the potential of increased profits, it also increases risk. So what leverage basically is, it's a double-edged sword. Okay, what leverage will allow you, it will allow you to hold, it will allow you with a small account to hold a very huge position. Okay, what I mean by that, if you have $100 account, guys, okay, with just $100, and if your broker is offering you a one to 100, all right, you could be able, okay, to hold a 10,000, okay, $10,000 position, all right. But if that trade goes against you by just in a small movement, you can blow that account. So as much as it can let you hold a bigger position. Okay, if that trade goes, because just imagine, like, your small account of $100 just holding a trade of like 10,000 US dollars. Okay, so with just a small movement, you will blow your account or you will lose your account. So leverage is a double-edged sword. All right. All right, so still on developing a strong mindset. So we have stop loss and take profit orders. All right, and as you can see, implementing protective orders. So these are protective orders. Okay, like stop loss and take profit levels is crucial for managing risk and securing profits in forex trading. Okay, so you need to implement protective orders. Okay, stop loss and take profit orders, these act like exits. Okay, these act like exits. So when you're wrong, you will exit out of the market with a loss. When you're right, which is take profit, you will exit the market out with a profit. All right, so these are just exit orders. Okay, and so some of the things you need to know for you, or some of the things that are needed to emphasize stop loss and take profit orders is importance of protective orders. Okay, so they are very, very important. Okay, because they help you guard your account. All right, so protective orders act as safety nets, as you can see right there. They help you guard your account. All right, a stop loss order limit potential a stop loss order limits potential losses, so it will limit potential losses. All right, while take profit order secures gains. All right, so this will act like safety nets. They help you guard your account. All right, so they're very, very important. Okay, the next is setting effective stop loss and take profit levels. Okay, and as you can see, determine stop loss and take profit levels based on technical analysis. Okay, so you need to base on technical analysis. You don't need to just throw your levels all over the place. Okay, just hoping. No, you need to base on technical analysis, market conditions, and your risk tolerance. Okay, all right, so next let's talk about risk management. So risk management is also an important aspect when it comes to trading. All right, guys. If you cannot guard your account, you will be out of the game very fast. Okay, and there's a saying that says it is easier for you to find another trade setup in the market than it is to find more money or more capital to fund your account just cause you blew it or you lost it or you lost the money. All right, you got that? It is easier for you to find another setup in the market than it is to find more capital or money to fund your account. So you need to stay in the game, guys. And how do you stay in the game? Is by applying good risk management. All right. All right. So forex trading risk management is the strategic process traders use to identify, evaluate, and control the potential losses from currency fluctuations in the foreign exchange market. So the foreign exchange market is um is the forex market. Okay, foreign exchange is just, forex is just short for foreign exchange. So still the same thing, foreign exchange market. All right. All right. So it involves implementing rules and tools such as stop loss orders. We talked about this, and careful position sizing to limit financial exposure, preserve capital, and ensure consistent long-term participation in the volatile forex market. Like I said, to ensure consistent long-term participation, because if you're looking at participating in the long term, guys, staying in the market so that you participate, you need to guard your account, guys, because so many traders come here and they're risking all their account. Okay, they're just risking all their account. You will lose that account. Okay, but if you risk a certain percentage of your account, you will stay long in the game. Okay, for you to be able to participate, guys. Okay, you stay long in the game, so you need to apply good risk management. All right, so this is just a note. Okay, your risk should be based on your account size. Okay, we talked about this. Okay, then let's say you need to be risking 0.5% of your account, or 1%, or 2%, etc. every time. Okay, so in my opinion, I don't think you need to go above 2%. Okay, you don't need to risk more than 2%. In fact, if I'm to advise you, just keep it between 0.5% to 1%. All right. All right, then let's talk about a trading plan. You need to have a trading plan for you to succeed in the market, or you need to have a plan for you to succeed in anything in life. Okay, so same thing in trading. You need to have trading plan. Okay, this is also important, guys, and you need to follow your trading plan no matter what. Okay, don't listen to anybody. Okay, the only thing you listen to is your plan, guys. Your plan. If you deviate from your plan, even in those days when it's not working out, you need to stick to your plan. This will ensure that you become disciplined, and when you have the aspect of discipline in trading, guys, you will be profitable, guys. I'm telling you, stick to your trading plan no matter what. All right, so you need to have a trading plan. So a trading plan is your roadmap for success in forex. All right, it outlines your goals, risk management strategies, and the steps you will take in various market scenarios. Okay, so you need to have, a trading plan. It's just that simple. All right, and it outlines risk management. So your trading plan will include, okay, your goals, okay, risk management strategies. Okay, so it will include that. All right, then, so following your plan diligently without deviating. Okay, you never have to deviate. Okay, without deviating based on emotional impulses is a hallmark of a disciplined trader. Okay, you need to be a disciplined trader, guys. Okay, all right, so now let's talk about trading strategy. And as you can see, trading strategy came after so many topics. I've talked about so many topics, and it later talked about the trading strategy. And this was um, because so many people look at trading strategy. They emphasize or they focus a lot on trading strategy. No, trading strategy is important, but is not as important as the first topics I've just talked about. All right, trust me, guys. You just need to believe me, okay? Trading strategy, as you can see, it came after some of the some topics that I've just been explaining, and the reason for that is because trading strategy is not as important as the things I've talked about. Okay, it's not important as trading psychology. It's not important as risk management, trading mindset. It is not, guys. Trust me, it is not. Okay, and when you're beginning out, I know people focus a lot on the strategy. All right, it is important, but it's not as important as the other topics I've talked about. All right, so trading strategy. Okay, so a forex trading strategy is a predefined systematic plan for entering and exiting trades. Okay, dictating when to buy or sell, which pairs to focus on, and how to manage risk. So trading strategy plan, okay, should give you a way to enter, okay, or it should give you entry or exit of trades, okay. Then it should tell you when to buy or sell, okay, which pairs to focus on, okay, and how to manage risk. Okay, so these are the components that should be in your trading strategy. All right. All right. Strategies are based on technical and fundamental analysis, and they help traders avoid emotional decisions, provide a consistent approach for performance analysis, and guide structured market analysis. So they either based on technical and fundamental analysis. All right, your trading strategy could be based on either of this, or depending on what kind of trader you are. All right. So now this is important, okay? For you to apply any trading strategy, you need to have back tested your strategy, guys. Okay, most of you just be going online, doing some research, and find trading strategy that is being advertised online, and next thing you're doing is applying. No, guys, you need to go back on your own and back test that strategy first. Okay, you need to know whether it works or not. You need to know the winning percentage, guys. Okay, because if you back test your trading strategy, you will be confident. Um you will be very, very confident. All right, when it comes, because let's say, because like I said, you will lose at some point. Okay, but if you back tested your strategy, okay, you will be confident that it works. Okay, even when you lose, you will still be confident that, okay, at a certain point, this strategy was, I back tested it, I went back in time, I did some back testing, and it works. All right, so you will be confident. All right, so back testing is key. Okay, it's very, very key. All right, before you apply a strategy, make sure you have back tested it over time. All right. All right, then another thing you need to note is there's no 100% winning strategy. Okay, and this happens to so many beginners. Okay, people are coming out, they're fooled by these forex gurus online, advertising 100%, 99%. No, guys, there's no, and I can tell you, you can get it from me, there's no 100% winning strategy. So don't waste your time focusing on getting a 100% winning strategy. It is not there, it does not exist. All right. All right, so next, let's talk about trading journal. All right, and this is also important, guys. Okay, because you need to journal your trades. All right, this is very, very important. So many traders actually skip out this part. Okay, but this is important. Trading journaling is very, very important, guys. Okay, and as you can see, a forex trading journal is a detailed log of trades, documenting aspects like entry or exit point, profit or loss, okay, strategy, enabling a trader to evaluate their methods, recognize strengths and weaknesses, and refine their strategy over time for more consistent profitability, guys. Okay, you need to journal, because like I said, trading is just like any other business, okay? And we know any successful business, they have records. All right, they have records on how they are performing. Okay, same thing with trading. You need to journal down your trades, okay? Because you need to know how you're performing over time in order for you to make or tweak or make changes. All right, and this will affect your performance. So trading journaling is key, guys. Okay, you need to journal your trades. All right, this is more often overlooked, but you need to journal your trades. Okay, it's very important. All right. All right, so now let's look at some trading illustrations, and this is where I want you to pay attention, because up to this point, okay, everything I've just explained, I'm gonna be talking about in these illustrations, okay, and this will make sense in these illustrations that I'm going to just show you here right now, okay. All right, so we have, this is going to be in examples, okay. So let's say, for example, one right here, okay. You have an account size of $100. Guys, pay attention, okay, because this is very important. All right, you have an account size of $100, okay, and you risk only 1% of that account, okay, with a risk to reward ratio of 1 to 2. All right, and your trading strategy has a winning percentage of 40%. Guys, this is where the catch is. Like I said, most of you people be looking for 100% winning strategies. No, guys, just pay attention to this and let this sink in your mind. With a strategy of just 40%, 40%, it's not even 50%, it's just 40%. All right, that means what 40% means, okay, of your trading strategy. What it means is, if you take 10 trades, okay, you will win 4. Okay, I'm just explaining what 40% means. If you take 10 trades, you will win 4 and lose 6. Okay, but guess what, guys, you will still be profitable 2%. 2% of $100 is $2. Okay, now let me tie in everything, some of the things I just explained previously. Okay, this right here, okay, this right here is your trading plan. This right here encompasses, this right here shows a trading plan, okay, because one, it has the component of risk. Okay, we're only risking 1%. Okay, and according to our trading plan, we're only risking, okay, or we're only taking trades that have a risk to reward ratio of 1 to 2. Okay, and this part here, okay, from where it says winning percentage, okay, this is the psychology part, guys. Okay, this is the psychology part. Okay, and this is what you need to understand. All right, this right here is the psychology part. So we talked about all those things I just knocked on. All right, so now let's go back and let me say this again. Right, so an account size of $100, you're only risking 1%. Okay, with a risk to reward ratio of 1 to 2. So this is important. Risk to reward, just what risk to reward means is, if you're risking 1, you're getting 2. Okay, you risk 1 is the risk and 2 is the reward. If you risk $10, you get 20. If you risk $20, you get 40. Okay, that's what it means. All right, now this is where it is important, guys, and I want you to pay attention once again, guys. Okay, with your trading strategy being at 40%, having a 40% winning percentage, okay, it's only winning 40%. Okay, you take 10 trades, okay, you win 4 and lose 6. Okay, so what this explains is what I've just talked about. Losses are part of the game. So as you can see, you're losing 6 times. Okay, 1, it explains that losses are part of the game. Then 2, it explains that your losses can be more than what you win, because as you can see, losses are 6 and wins are 4. So losses are more than the wins, okay? But you're still profitable, guys. Okay, you're still profitable. All right. If there's anything I want you to take out of this video, is this part right here. Okay, with just 40%, okay, you will lose more than you win, okay, but you will still be profitable, guys. All right. We can even take this to 30%. We can even have a trading strategy go down to 30%, but you will still be profitable. And how will you be? Is by increasing your risk to reward. Okay, so let's say your trading strategy was just 30%, okay, with the risk to reward ratio of 1 to 3. All right, this is just another example. Okay, so that means out of 10 trades, okay, you win 3 and lose 7. Okay, so 3, so you take 3, okay, the 3 wins you have times your reward, which will be 9, then 7, the losses you would have had right here, times 1, which will be 7. So 9 minus 7 will be 2%. You will still be up 2%, guys, even with just a 30% winning strategy. All right, just 30% winning strategy. But the only twist is your risk to reward would have gone up. It would be 1, 2, 3. Okay, so the most important elements is just have a risk to reward. Just take trades which is advisable. Okay, you need to take trades which are at least a 1 to 2. Okay, guys, this right here, you know, it is not mind blowing, because so many people, you know, first of all, they're afraid of losing. And as you can see right there, all right, you can lose. I can even lose 6 times. Let's say I back tested my trading strategy and I know it has a 40% winning rate, all right? And if I lose 6 times in a row, okay, let's say I lost 6 times in a row, okay, I won't be, you know, I won't be offended, or it won't have any reaction on me, or any negative reaction on me, because I know after losing 6 times, the next 4 trades are wins out of 10 trades. Okay, because the winning percentage is right there. I back tested it and I know it. I can have a losing streak of 6 trades. Okay, let's say I take trade 1, I lose it. Trade 2, I lose. Trade 3, I'm losing. Trade 4, I'm losing. Trade 5, I'm losing. Trade 6, I'm losing. I will not care, guys, because I know after that, and actually I will be happy, because the 6 losing trade, the losing trades are done. Now what's next? I'm gonna win. And like I said, with a risk reward of 1 to 2, I'll still be up 2%. And 2% of $100 is $2. Okay? Now, you see this note right here? If this is done consistently, you will become a profitable trader. This right here is the key to becoming a profitable trader. Only if it's done consistently. Consistently is the key word. All right. So now the next thing you may ask is, okay, I've seen all this, but you know, $2, is that good profit? Now, guys, let me tell you something, okay? And this is something you need to understand, okay? Because I see so many people making mistakes, okay? They think that, you know, you need to have a big account or a huge account. I agree with that, guys, okay? But trust me, if you cannot manage a small account, if you can't manage a small account, you won't manage a big account. So if you can't manage $100 account, then you will not be able to manage a $2,000 account, okay? The only thing you need to focus on first, okay, is, like I said, okay, trading psychology, okay, your trading mindset, okay, then acquire the skill. Because if you have those and you're given a bigger account, you will still apply the same rules you applied on a small account on a big account, and you will be profitable. The keyword is consistently. If you can do this consistently, it doesn't matter. They can even give you $1 million, okay, or $20 million, okay. If you could do it consistently on a $100 account, you will do it on a bigger account. All right, so now let's look at another example, okay? And as you can see in this example right here, the account size got bigger. Okay, so this is example 2. So the account size is $1,000. Okay, our risk still stays at 1%. Okay, and our risk to reward ratio is 1 to 2. Okay, that means if I risk $10, I get 20. Okay, then your trading strategy winning percentage is just 40%. Okay, what that means is out of 10 trades, you win 4 and lose 6. Okay, so you're losing more than you win. So guys, don't fear losing. Okay, the only thing you need to take care of is what I've just said before. All right, don't fear losing. You can lose more than you win, but you still be profitable. And in this case, you still be up 2%, and 2% of $1,000 is $20. So as you can see, if you bump up your account to, let's say, from 100 to 1,000, okay, let's say you're able to do it on $100. Now you have $1,000. Your profit goes up as well. But the most important thing is you need to have been able to do it on a small account first. Okay, focus on the skill first. Okay, acquire the skill, then you will apply the skill on any other account. All right, as you can see right there, the profit went up. Okay, and again, consistency, or you being consistent, is key to becoming a profitable trader. All right. Right, so example 3, as you can see, the account size grew much bigger. And the reason why I'm showing you this, because like I said, so many people focus on big accounts. No, you need to focus on the skill first, okay? With the 10K, this example, 10K account, okay? 10,000 US dollars, okay? You risk 1%, risk to reward ratio of just 1 to 2, okay? Your trading strategy has a winning percentage of 40%, okay? Out of 10 trades, you win 4, lose 6 again. So you be up 2%. Okay, so 2% is $200. Okay, same thing. It went up because the account size is much bigger, and you need to do it consistently. All right. So next thing, again, so this is another example, and this is 100K. Okay, so let's say you got a 100K account. Okay, again, you apply a risk of 1%. Okay, so this could be anything. Okay, if you change this obviously to 2%, your profits will be higher. Okay, the higher you go, the more profits. Okay, but the more risk. All right, so you need to have that in your mind. Same thing with the risk to reward. Okay, the higher the risk to reward, so you had 1 to 5, your profits will be higher, but your losses will your profits will be higher as well. All right, if your strategy, let's say if you have a strategy that has a 1 to 5, all right, of course your profits will go higher. All right, so same thing, 100,000 US dollar account. Okay, winning percentage 40%. What that means is 10 trades. Okay, out of 10 trades, you win 4. Okay, lose 6. Okay, still be profitable by 2%, and 2% is $2,000. As you can see, the winning percentage remains the same, but the profit increases because the account grew bigger. Okay, then again, if done consistently, you will become a profitable trader. All right, so now let's look at the conclusion and just wrap up everything we just talked about. So we talked about trading psychology, guys, and let me emphasize this once again. If there's anything that you could have taken out of this video, guys, that is trading psychology, hands down. This right here is unmatched and compared to anything in trading. Okay, anything, nothing comes close. If you can have good trading psychology, guys, okay, because this is why most traders fail. Okay, most traders, you can have a 99% winning strategy, but if you don't have good trading psychology, guys, you will quit. Okay, because when losses come, they will find your mind. When you don't have good trading psychology, you will be frustrated and you will quit. Okay, because your mind is not prepared. Okay, your mind is not prepared. Okay, it's not there. Like, as soon as you see a loss, you're like, this is a scam, I'm out, let me quit. And like the saying goes, trading has only two outcomes. Okay, it only has two outcomes. Okay, you can either quit or hang in there. Okay, when hard times come and win. Okay, so if you persevere through the losses, through all these challenges, you will win eventually. Okay, yes, let me tell you something. Trading is not easy, but it's doable if you do it rightly. Okay, and going back, trading psychology. In fact, if there's anything that you need to focus on in this video, it's trading psychology, guys. This is the most important aspect of trading. The most important. I cannot say that enough, guys. Okay, just believe me and take it. Okay, it is the most important aspect of trading. All right, and if you can perfect this, guys, you will thank me later. All right. All right, so next we talked about risk management, and we said this is important as well because it helps you guard your account. Okay, you need to be able to guard your account. Okay, you need to be able to stay in the game for you to play. Okay, if you're out, you can't play. All right, like I said, it's easier for you to find another setup than it is to find more money or capital to fund your account just because you lost it. So you need to apply good risk management. Okay, we also talked about the trading plan, and we say you need to have a plan and you need to follow it at no matter what. Okay, you don't need to focus on anything, even if you have information from I don't know who, I don't know, the best trader or the best CEO in the company. No, guys, stick to your plan, guys, because this right here will guide you, and this right here will ensure that you become a disciplined trader. You need to follow your trading plan to the dot, guys. Okay, lastly, we talked about trading strategy, and like I said, I made sure I mentioned this last because so many people, so many of us, focus a lot on trading strategy. And trading strategy, like I said, you can have the best trading strategy, but if you don't have this, all right, guys, you will lose, you will quit. Okay, you will be frustrated and just quit. All right. All right, again, let me explain this example once again. Okay, and this right here, has everything we've just talked about. All right, just an account size of $1,000. Okay, you're only risking 1%, so you're applying good risk management. Just risking 1% with a risk to reward ratio of 1 to 2. That means your trading plan tells you you can only execute a trade if it's a 1 to 2. If it's a 1 to 1, you're not taking a trade. If it's a 1 to 9, 1 to 9, 1 to 8, 1 to 5, no, it should be at least a 1 to 2. Okay, if it's a 1 to 3, it's okay. 1 to 4, 1 to 5, so at least a 1 to 2. Okay, we trading strategy that has a winning percentage of just 40%, and what that means is out of 10 trades, win 4, lose 6, so you're losing more than you win. Okay, so you shouldn't be afraid of losing. Okay, you're losing more than you win. Okay, you still be up 2%, and 2% of $1,000 is $20. If this is done consistently, you will become a profitable trader. All right, so I think I've said anything I wanted to say, but before I close this video, guys, let me say it again. Trading psychology, guys, this right here, if you don't have this, okay, guys, I hate to spell doom, but you will not survive. You need to work on your trading psychology first. All right, so with that being said, I think I'm gonna close this video right here, and I'll see you in another one. Bye.